What's up guys, welcome back to the channel. We are back with a new video. Today we are going to talk about the stock market and the best way to start investing in the stock market. As you can see, we are rolling with a new field of view, plus I'm holding a microphone because it looks cool, and otherwise I'll just start moving my hands up and down and not really know what to do them, so this helps that. And it just looks cool. I like it. So we're gonna roll with it and see how it goes. Look, before we get into this video, I'm just gonna say I'm not a financial advisor. I'm not an expert. I'm not giving financial advice. Please don't follow what I say and get mad at me if something goes wrong. This is purely for entertainment and me sharing my experience investing in the stock market. So again, we're talking about stocks and how to get started investing. The easiest way that you can get started investing, you can get started today if you really wanted to. But I'll kind of go into how I started, and I'm going to tell you why you should start investing, how you can become a millionaire when you're older. It's really not too hard. All it takes is a little discipline and saving, and that's pretty much it. And you will have $1 million when you retire. Look, I shouldn't have to tell you how important investing is. Investing is so important in your life. You need enough money whenever you retire to live comfortably and not have to worry when you're old. Because the worst thing in the world is having to go back to work when you're like 90 to work at like a gas station or be like a trucker. You don't want to do that when you're old. You want to be sitting on a beach somewhere, or just maybe on your couch at your house, and you want to not have a care in the world about money or anything until you die. It sounds so morbid, I'm sorry. Alright, let's get into why you should start investing as early as you can. You should start investing as soon as you turn 18, because the longer your money is in the market, the more money you're going to make due to compound interest. If you have a ton of money just sitting around in a bank account, first of all, you're just losing money due to inflation. Inflation is rising about 2% each year. That means your money is getting devalued by 2% every year that your money is sitting there not making you more money. I just said money so many times. The expected rate of return in the stock market over a long period of time is 7 to 8%. So instead of having your money sitting in a savings account losing money, you can actually put it into a brokerage account or maybe an IRA, a retirement account. Buy some stocks, buy some ETF, be diversified, and beat that inflation and also make money in the process. A lot of people when they first start investing have no idea what they're doing, and that's totally fine. The best way to learn is by actually doing it. You can hear all these people talk about how to invest, and they can show you step by step, but until you actually go out and do it yourself, you're not going to learn very much. I've heard the concern from beginners about putting money into the stock market, how it's just gambling. You know, you're just betting on these prices to go up. It's just like the lottery. No, that's not it at all. So this chart from a credible source shows you the percentage of negative versus positive annualized returns for the S&P 500 index over the course of 1, 5, 10, and 15 years. If you don't know what the S&P 500 is, it's a market index that tracks the top 500 stocks in the United States. Whenever you're investing in the market, you're looking at the long term. You're not going to be a trader, you're going to be an investor. You are investing for your future. You can try trading, try day trading. Most people lose money on it unless they spend all their time doing it. You can't be a good day trader unless that's your full-time job. We are going to focus on long-term investing and growing your money over the course of your life. As you can see, 1 year periods, 26% of the time throughout that year was a bad market. The market was down, but 74% was up. So overall, it is up. If you kept your money in the stock market for 15 years, in an S&P 500 index or fund or ETF, whatever you want to call it, you will have 100% chance of being in the green and making money. That is every 15-year period from 1926 to 2017. That is insane. For 15 years, if you left your money in there, you are guaranteed to make money within that amount of time. Now, I can't say anything for the future, but based off the historical data that we have here, it's looking pretty good. You're going to make some money if you keep it in for about 15 years. All right, check out this next graph. This one shows you the power of the stock market and actually how much money you can make over the long term. This shows you 3 examples of 3 different people. We'll start at the bottom. We'll start at the purple. Bill. Let's say you invest $5,000 annually between the ages of 35 and 65. So every year from when he turns 35 to 65, put $5,000 into the market. He ends up with a total investment of $150,000, which grows to $500,000. That's a good ROI on his investment. But let's take a look at Susan, who invests $5,000 annually between the ages of 25 and 35. It's only 10 years investing. So in total, she'll invest $50,000, which will grow to even more, $562,000, even more than Bill. And that's because she started 10 years earlier. But she didn't go all the way until 65. She only invested in a 10-year span, but she started even earlier than Bill did. Now here is the craziest one. We see my boy Chris invest $5,000 annually between the ages of 25 and 65. Now in that amount of time, his investment was $200,000, but it grows to over $1 million. Over $1 million. That is insane with just $5,000 annually. Do you know how much that is a month? That is only $416 a month. Eventually, if you cut back on your spending, if you budget, video on the top right, you can find $400 to invest. Or you can start with $200. You can start with $100, and you'll make hundreds of thousands of dollars in the stock market if you start early. So now that I've got you pumped about investing in the long term, I'm going to tell you the easiest way to start investing. Arguably, this is the way that I started, and I use Robinhood. I think it's the most easiest app to use. It's so user-friendly. The UI is absolutely insane, so intuitive to learn, and it's super easy. I'm actually going to go through a walkthrough with you right now on how to do that. The first thing you want to do is go to the Apple Store. If you have an iPhone, if you have anything else, go to your store. I don't know what it's called. Here we go. You're going to scroll down. It's going to be the first one. See, I already have it, so I didn't want to really delete it, but you'll download it, open it, it'll ask for some information, and you just fill it out until you get to the home page. You have to connect your bank account. You have to get some money in there. That's super easy to do. Just follow the steps and until you get to this point. I'm just going to blur this out for now. If you want me to make a video on it revealing my portfolio and the total amount, I can definitely do that. Let me know in the comments if that's something you want to see. But for now, we're just going to blur it out and keep the mystery going. So let's say you have the money in Robinhood, okay? And you're thinking, oh, now what do I do? How do I pick stocks? I don't want to have to do all this research on these stocks. I don't have the time. I don't know what to look for. What stocks do you buy to where you don't lose money? Well, let me tell you. There's something called an ETF, which means an exchange traded fund. This is basically just a fund that was made to mirror the S&P 500. Like I said earlier, the S&P 500 is the top 500 stocks in the United States. So if you have a fund mirroring that, you're going to be very well diversified because it expands to about 11 different sectors. I'll just show you the performance of SPY. SPY is a good one. SPY is an ETF that tracks the S&P 500. So as you can see, for the day, it's only down $1.41. For the week, it's up almost 1%. For the month, almost 5%. For 3 months, almost 10%. For 1 year, it's up 46%. And for 5 years, 100%. If you were to put $10,000 in here back in 2011, you would have $20,000 today. This is a very well diversified stock to start out in, and I recommend getting this one stock. You don't have to have 20 different stocks. You can start out with this one, and then you can start investing in individual stocks. This is how I started. I started out with ETFs, and I moved to individual stocks. I mostly trade individual stocks right now, but I'm be sure to be well diversified on what I'm picking. By diversified, I mean have stocks in tech, have stocks in pharmaceuticals, have stock in energy, have stocks in water, have stocks in consumer goods, all of those things. So if one sector goes down, the other ones will hopefully be up to kind of mitigate that loss. Also, it's not a loss, it's just down at the moment. It will go back up if it's a good stock. So that's why you want to hold long term, and you don't want to sell as soon as your stock is going down. And that is how I recommend you start. I recommend you start with either VU or SPY. Get in, invest a little bit, keep investing consistently, keep investing per month. Don't do just one lump sum every year. You need to do the dollar cost average, where you buy in every week or once a month, or you buy the dip, but do it consistently and do it throughout a span of time. I really like holding this mic, it's really cool. Another cool fact that I literally just learned today was that 40% of the market gains tend to come from dividends. That's insane. Dude, this light is so bright. I'm gonna be freaking blind after this. So yeah, that's kind of my experience with investing. I started on Robinhood. It's a very easy platform. Buy an ETF, buy a mutual fund, do your own research on mutual funds. Just look it up. It's a basket of stocks, so you're well diversified, and that's how I recommend you start. Look, I know when you're young, fresh out of college, or you fresh move out of your parents' house, whatever, you're going to want to go do fun things. You're going to want to experience life. You want to hang out with people, go out, spend some money, have some fun. And I'm not advocating for stopping all of that. I think that experiences like that are priceless, and I definitely am down for a good time. But I also think that it's important that you start thinking and planning for your future self. Your future self is going to thank you so much whenever you wake up one day when you're 65 and you've got $1 million sitting in the bank account, and you're like, let's just chill. Let's just chill all day. Don't have to do anything. I got $1 million in the bank. Let's do nothing. The longer you're invested in the stock market, the more money you're going to make. The earlier you start, the more money you're going to make. That's pretty much all I have today, guys. Thank you so much for watching. I'm sorry I couldn't get a video out in 2 weeks. That was my bad. Yeah, I got no excuse, but I'm going to set a standard today of a new video every Tuesday. Every Tuesday at 3:30. A new video will be out by me every Tuesday. This is a promise by me, and I will not break this promise. I will give you new content every Tuesday at 3:30. Click the notification bell so you'll be notified when this happens. Please like the video. It helps my channel out greatly. Every time you like this video, it helps the YouTube algorithm push this out to new content so we can start growing the channel more. So the more you interact with the video, that's a like, that's a comment, that's a share, whatever you want to do. It helps the channel out greatly, and I appreciate it so much. Please subscribe if you haven't, and I'm going to leave you off with a quote from the GOAT himself. I'm talking about the gray-haired, tongue-out guy that we all know and love, Albert Einstein. He is quoted as saying, "Compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it." And I think that's freaking dope. That is so cool that he said that. If Albert Einstein's saying that, obviously this is something that you need to do. Look, I know this video is a little jokey and a little lighthearted, but I think the content is serious and something that you should actually seriously consider for your future. Anyways, guys, thank you so much for watching. I really appreciate it, and I'll see you next Tuesday with a new video. Let's go!